Greetings, members, one and all of the Salivation Nation. Gold is down, oil is up. This is getting weird. Let's explore. I don't know exactly how weird it is because we've been here before. We've seen, there's been times when we've seen gold go down and oil go up, but it is a little bit strange. But let's take a look at where the prices are right now. Everything is kind of down a bit. Gold is down, silver is down, well under $27 an ounce. Gold is at $17.26, and platinum has taken a little bit of a hit as well. But what's going on here with crude oil? The closing prices here we have that it is fell a little bit, but it's still up. Benchmark U.S. crude oil for April delivery fell 86 cents to $60.64. It's not going to have much effect on the at the pump, though. At the gas pumps around the country, prices are up dramatically and been climbing like nuts. And Brent crude oil for May delivery fell 73 cents to $63.69 a barrel. So wholesale gasoline for April delivery rose 7 cents to $1.94 a gallon. If you can find gas for $1.94, man, good luck. But these are actually wholesale gas prices, not what you pay at the pump. But heating fell 4 cents to $1.82 a gallon. April natural gas rose 1 cent to $2.78. And we see gold for April delivery fell $5.80 to $17.23 an ounce. Silver for May delivery rose 24 cents to $26.68. And so it looks like we're in for some pain in terms of oil and gas prices. But for precious metals, you're in for pain if you were expecting them to rise soon. But as I've warned and mentioned this in the past, that we may see the prices go down before things go up. And this could mean, especially in terms of gold and silver prices and U.S. Treasuries, apparently. We're seeing the bond yield move in a particular direction. We'll look at it here from this article from FX Empire. Is this an indication of punctures in the everything bubble? The price of gold early Friday morning this past week touched $17.20. At that level, it was down $350 per ounce from its high point of $2,070 last August. So the size of the decline is not unusual at face value, but in light of the expectations for hugely higher inflation rates and much higher gold prices that have dominated the headlines over the past year, the drop might signal a cause for concern among gold bulls. And by the way, also silver bulls, especially with what's going on with this silver squeeze that we're in the midst of in the physical markets. Meanwhile, eyes are fixed on interest rates for U.S. Treasury bonds. During the same 6-month period from August of 2020, when gold hit its high, to February, during which the price of gold fell by 17%, the price of the 20-year U.S. Treasury bond fell by 20%. That's a huge deal, and it corresponds to sharply higher interest rates from less than 1% last August to as high as 2.26% just the other day. The rush to proclaim correlation between the interest rates and gold has resumed. Also, warnings and predictions of much higher inflation from around the globe are increasing. The world economy is sick right now, and I think this is why this could potentially be a buying opportunity for those of us who see and understand that gold and silver are a hedge against such a time as many of us fear could be coming. We just don't know when it's going to hit. When will we feel that pain? As we've said on several occasions, there's no correlation between gold and interest rates. And this can be seen in the charts below. The first chart source is a history of gold prices of the past 56 years, and the second chart is a history of interest rates over the same period. Now we can see gold has been on a move, on a sharp incline here. It won't let me expand this. There it is, this chart here. But yeah, you can see how it's moved over the past 56 years. Over this particular period of time, very volatile to some extent, especially. But we have seen these activities, and these gray lines indicate recessions, and we are assumedly still in a recession right now in 2020. And but what's interesting about these recessions is during that time, typically in the midst of it, the prices go down, and then after we get out of it, the prices tend to go up during a recession, at least to some extent. And we've seen that in 2000, the prices for gold went up and have climbed since then. So anyways, there it is. 10-year U.S. Treasury rate from 1965 to 2021. We can see its movement in these areas have taken, especially here, 2020, to these lows. Crazy. All right. During the 70s, the price of gold rose from $40 per ounce to an intraday peak of $850. Throughout that time, the interest rate on the 10-year U.S. Treasury bond rose higher and higher from approximately 4% to 12.5%. However, during the years of 2000 and 2011, while the price of gold rose from $250 to $1,900, interest rates in the 10-year U.S. Treasury bond dropped 6% to 2%. The 2-decade-long periods provide contradictory results for the argument that lower interest rates are correlated to higher gold prices. And for those who argue that the higher rates we are currently seeing are an indication of a significantly higher inflation, then why is the gold price declining? Well, the dollar index is one of the major reasons, I think, right now, as well as the bond yields. But we'll see how it plays out. The higher interest rates are possibly a market reaction to the brutal effects of infinite credit creation and interest rate manipulation by the Federal Reserve. The entire world economy is funded with cheap credit, and most economic activity is dependent on it. That includes, by the way, all these dollars being pumped out by the Federal Reserve and that are propping up the stock market. And so when stimulus happens, well, you would think gold would go up because I know the value of the dollar is going to eventually go down with this, but typically there's this short-lived steroidal high that people are getting in the markets, and that means that people are, hey, let's get into the markets, let's abandon gold or sell off gold and get into the booming stock market. We saw it go up today about 600 points. So it's interesting. The psychology of the market is quite fascinating, how people react. And of course, that does have an effect on gold and also cryptocurrencies, Bitcoin being the primary driver, as people have, some have abandoned the gold space and moved to Bitcoin. And I think that is another aspect that they're not taking into account in this article. The entire world economy is funded with cheap credit, and as I mentioned here, and the prices for all financial assets misrepresent and grossly exaggerate any underlying and fundamental value. Higher rates might trigger a credit collapse so severe that any asset could decline in price by 50% or more. As for gold, it would also decline to a level commensurate with whatever strength the U.S. dollar attains. And that's really the bottom line, is the U.S. dollar strength is kind of what drives the price of gold in terms of day-to-day activity. But as we know, demand is a huge driver too. And some of that demand has waned off a bit. Gold and silver demand has driven off in terms of stacking for, investment demand for the metals. So I think that's something to take into account as well. But it is weird to see, especially how many people tie gold to oil, fuel prices, and there is some correlation there, but they have been known to trade inverse of one another. And but by and large, I think we're going to see things. I'm still bullish by the end of the year for gold and silver to rise, but so far we're seeing a pullback here in the metals. But it is still early on in the year. We are now into our third month, and how things will play out and how quickly some of these policies that are going to be taken into effect, with more modern monetary theory, and stimulus, and also environmental actions that are be causing more silver to be utilized for EVs and solar panels. We'll see how that all plays out. So there you have it. Let me know your thoughts in the comment section below about this news for the day. Gold is dropping and oil is up, and the weirdness of it all. Let me know. I'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.